Yeah, these markets are really, really flushing here. It's a beautiful thing. So here we go, the Nasdaq, which is one of the stronger markets. I don't think it will be on the way down. I think they'll all be very weak. So I don't think the Nasdaq's going to buck the trend. So far, it hasn't really either. Look, left shoulder, head, big right shoulder, and now it's just like I said, maybe the gap fill, maybe not, but we're going to go down. That's exactly what happened. Well, actually, again, Nasdaq's holding the line just. But I think we'll have continuation. I think yields will continue to rise. I think markets will continue to fall. I think the Nasdaq will start to flush this level. So for me, the close really below 3.5, it doesn't matter. 3.52, even 3.50 really does it. Let's say 3.50 because we're seeing big moves now. So I don't think that's too much to ask. So one more down move and the Nasdaq, well, basically goes down here. Honestly, my levels have been completely correct. So no need to readjust, which is fine if you readjust a bit. But I'm just going to leave it as it is. So I don't think Nasdaq will go down to 347, 347.50, which is like a little mini zone. I think we're talking big moves now. S&P, look at this. The neckline definitely was a level, although it went straight through it, hit the ascending, small bounce. You can see it held just within the close at least. And then yesterday, just bam, massive flush close below. Next level, it's not as obvious, but pretty much here-ish. Let's call it 415-ish on the S&P. I think we can get there today because it's not that much more of a downside. And I don't think this kind of candle allows you to close back into the ascending. So I think a little bit more downside at least. You get these little bounces, but I think we're going all the way down until the market breaks, until the economy breaks. It's what I've said for a long time. And now you're starting to see a few other headlines just saying the same thing. A lot of people have been saying the same thing, but now we're starting to see the price action reflect that. So I think we basically go down, a little bounce here and there, down more until something really collapses, which forces the Fed to pivot, and then everything reverses and makes new highs, new all-time highs. But maybe we see a lot more downside before then, you know? Okay, so S&P, that's your next level. Dow Jones, have you noticed how I'm not covering the resistance on the way up? I mean, resistance on the way up by rule of trading is just prior support, so you can tell where I think that is. Dow Jones a bit like the S&P, a little lower, down to here, 33,000, let's call it 750. So not too much more downside. And I think yields already are going up this morning. We'll take a look at that. Obviously, it's got to sustain by the end of the trading day. Macro news, I haven't even checked what data's coming out today. There's always data, so I don't need to look too much into it. But look, down we go a bit more on Dow Jones. Now the Russell, right, which was, yeah, it was already the weaker one, and it always is. And I said it would be. Look at this huge move down. And I was saying, look, a few more trading days low, and you're talking about second last level in the sand before the absolute bear market moves. We're there, really. Look, 168-ish, 167, 168, which, by the way, if the Dow and the S&P and the Nasdaq go down a little bit more today, which I think they will actually, that's where we're going to be. And that's probably why we're going to find support the day after. One more mini move down and they will have a bit of a support zone. So we'll have a little bounce. Everyone will get excited. They'll probably coincide with some news or some Fed speak or whatever. And then down we go because it's all about yields. It's always been about yields. Banking stocks that also were a little outperforming the last couple of, not the last couple of trading days, but a few, for the last 2-3 weeks or something, they were sort of bucking the trend a little bit. No way do you buck it now because everyone's focusing on yields and the bank losses that have not been realized. And basically what was true for the last couple of months is just now coming to the forefront. So look, XLF, which is also doing okay. Look at this close below support, trying to do a bit of a gap fill. We don't care about gap fills here. I think we're going to keep going lower. And I think the banking stocks are going to magnify their moves down. You can see they were sort of underperforming, I would say. I mean, a lot of things got crushed, but banking stocks got crushed yesterday. Not crushed, but, heavy hit. So I think XLF will actually move down even more. We're talking low 31s. Well, it's not going to do it in one trading day, but I just see it going down here. Let's say mid 31s at least. Definitely below 32 if we have another move down. KBE, this, XLF, I don't care actually. It's the KBE. It's all about this. Look at this. It's tagging support. Now, I think the markets will go down a bit more, but maybe the small banking stocks, maybe they have a bit of a green day. Just, I can see that happening. Just one of those sideways days trying to hold this line. If the markets go lower, I don't know, it could be here, probably 34. If it is going to make another drop, then maybe a 34-ish. Maybe KRE does it. Yeah, there's no obvious support. I can see why I didn't put a horizontal line. It could, if it had to go down to here, that, sort of last pivot low down here, if it had to go lower with the markets today, and then it'll have a bounce back up above this level. I don't know, but I feel like we're in the second last level because after this, there's no real support until the absolute lows. KBE, same thing. We could go a little lower, like I said, 34, and then there's the absolute lows, and that will coincide perfectly with the Russell. Could go a little lower here, should go a little lower, find support, and then absolute lows, and that's what's going to take down the markets. Because once the Russell and the banks start to make new lows, trust me, the Dow, the S&P, the Nasdaq, that's flushing support. And then you're going to wait a couple of days probably until there's a huge banking crisis, or probably coincides with the banking crisis, and then the Fed pivots. That's all, maybe doesn't pivot exactly, it starts to talk, jawbone, like, okay, we can expect rate cuts, QE instead of QT, just little things, maybe jawboning, and then at one point actually doing, because we've seen them change their mind very quickly. They don't care about breaking their word. All right, let's look at interest rates. 1 year sideways up, strange candles as always. We don't care about that. 2 year, I said we have a nice little retracement. We're going to curl and go make new highs. 2 year, probably going to do it today. 5.2, close above 5.2. I don't know if it's going to do it today, but that's the destiny until something changes monetary policy wise. 5 year, look at this. I mean, the 2 year is the most important because that's what the Fed follows. But when you start looking at anything 5 and up, look at this. And where's your resistance levels? This is the key. There's nothing until like 5.2 for the, let's look at the weekly. It's actually easier. 5.2, not even 5. Yeah, it'll touch 5 and sort of back and fill, but 5.2 is your next resistance. I can't believe I have to start putting in these trend lines. Well, I know it's 5.2 and it's 5.2 kind of for all of them. Look at the 10-year. Same thing. 5.2. I'm not even going to bother. I just know this one by heart. And the 30-year, let's look at the daily. We need to respect this move. This is crazy stuff. Okay, the 30 years, the really crazy. The 10-year, no difference. There's not even, like, there was this little moment of, oh, this is a bit crazy, probably because of the 2 year breaking out and trying to retrace. It's probably 3-4 days ago, a little retracement here, so everyone follows suit a little bit, but not much. Just look at this. This is a total blowout squeeze. What about TLT? Look at that. I was saying, look at this. This is absolutely what I'm talking about. And people who are trying to hide in bonds getting demolished. Why are you in bonds? For some yield that you can get in the money market anyway. No, just hold cash and then get into your best big stocks. Like, even if it's going to be tech stocks, but for me, it's resource stocks. I'm talking BHPs, the Newmonts, Agnico Eagles. Just add to that as you hold dollars and gold and silver. But bonds, no. The bond market has had 40 years of one way, and now it's going the other way. And that's just crazy. I mean, that's what I expected, yields go up, people sort of not believing the Fed or thinking they were going to top out. No, higher for longer than you think. And by the way, what about the Europeans? This is the EU 10-year. That's just making a new high today, this morning. What about the EU 30-year? Which probably is just as important. Look at that. It's just like the US, just total breakout squeeze. Where's your next resistance, by the way? And this is important too. Not everything's the Americans. Next resistance, I don't know, 3.8. Think about how much more of a move that is. I mean, it's just, oh my God, it's just crazy stuff. The Japanese, by the way, it's over. You've lost, like, the central banks have totally lost control. And do you really want to buy, tech stocks, or do you want to, I don't know. All right, I'm getting pretty excited. I mean, this is exactly what I thought would happen. The DXY, which is also stormed up. Look at this. It is not going to roll over yet. For me, you've got to break this ascending support. So I'm just going to keep that. I love technicals because in such mayhem, that's the one thing you can trust. It's like navigating with the stars. We've hit a little mini resistance. These levels, I haven't touched any in a long time. 107, you can see why. A little high of these two. Did it act as resistance? A little bit, but it's too early to say. Next level is 108. And again, if it starts to dip, here's your support. Not only these two tram lines, but the ascending. So very strong support here around 106, just below still. So 106 on the way down, support, resistance on the, actually resistance is where we are, but if it does go higher, then an entire point higher, 108. After that, I see nothing. This 108.5 shouldn't really count. Then it's the double digit, you know, the 110s. And honestly, this was a rough, it's probably here. The next one really, I can't believe we're talking 110 already, but let's see if we get to 108 first. But DXY, very, very strong. Look at this. It was really this day here where the metals got crushed and the DXY wasn't even up yet. I thought now we're going to retest at least, and look what happened, smashed up. Okay, the dollar's really, really strong. It's been the same thing for a long time. That's pretty much going up with yields. But the day will come, you know, it's for yields and the dollar, it's going to have to be macro news or monetary news. I think that changed it. I don't even think geopolitics can change it, actually. I think it's really monetary policy. And I think a lot of people know that the market will continue to drop as yields go up. And then as the market just cascades lower, there'll be a change in monetary policy because the system is mathematically going to break quickly the way things are. So dollar up for now. Let's look at the commodities that are also suffering because of it. Look, copper, I said, flush this zone, go lower as long as the dollar goes up and the markets go down. That's what's happening. So we should visit 355. We could bounce from there. If we go lower, honestly, I haven't even looked. Maybe, you know, we're not going to go all the way down to this level, but probably 3.35. Nothing too crazy. But yeah, let's just zoom out. I don't look at copper too much, so I keep it nice and zoomed out on an average. So I think I know why I put the, yeah, just generally next level is around here. So 3.3-ish. For copper, if we flush 3.5, now natural gas, like I said, doesn't care about yields, doesn't care about the dollar, doesn't care about the markets, just doesn't care about you or me. It just goes, it does its own thing. Look at this, higher lows. And I said, I'm looking for close above 305, above all of these highs, you know. First of all, it breaks the high, but also closes above it. That's really the best confirmation because it's so unpredictable. But look, otherwise going up. This is a very good candle, very good close. I think the best close in a long time, except this one. So it could do it today. It should do it today, and proof that it doesn't care about the markets because it's doing it during absolute turmoil. So natural gas close up here, and then really time for shorts to cover. I'd be covering. Imagine you're short. Like that's already obvious. You're just waiting for it, and then probably a lot of short stops get triggered. And I think we basically not in one day, but start to head up to this gap zone 4. So look forward to that. That's a good call too. Oil. Oh, this is a bit chaotic over here. I guess it's still strong. It's just going down because of the market too. Yeah, it's encountered resistance over here. I remember 92, 94 for me was resistance. So that's so far so good. I think if we do go low, I added this ascending support zone a few days ago, I think. So, you know, if it starts to go down with the markets, which it can definitely do, we've got support around here, the ascending and this horizontal. So your support should be about 85 on the way down. Resistance on the way up should be, it should be the other high. It should be sort of 95-ish, the more recent high, sorry. So I'm just going to put this here. Yeah, so 95 on the way up. This kind of doesn't matter anymore. We just get rid of it just to make it easier on the eye. So 95 on the way up. If it goes even higher, 97, I expect a bit of resistance before 100. But yeah, on the way down, we've got 85. So there you go. That's nice and clear. Very strong oil, given everything that's going on. Uranium, there you go. That's what I was saying. 28, 20.5. You're not allowed to go straight through. Very impressive stuff. Even during a bit of market craziness, it still sort of wanted to test this high. It did. Goodbye. And what did I say? I said 24-ish. Yet you can see that happening even today. you know, so you got to take something out off the table, you know. And then I'm going to start looking at this now. There is market craziness going on. So, and I know that even something as fundamental as uranium, if it comes down to support, it will bounce here for sure. If it goes to 24, to be honest, it'll probably bounce about 24, 24.50, to not allow people like me who want to nibble. But if it starts to go 24, 24.50, or even lower and starts hitting this ascending old breakout, which it never retested, by the way, 23, this is a buy over here. And if it keeps overshooting, that can only be because of the market. And then very, very lucky people like me get to see a train reverse back into the train station. And then you nibble a lot more down here. I don't know if it'll get down here, even during the market. During an absolute market crash, it will. People are selling everything just to cover their other positions, margin calls and all that. So, you know, they're winners, gold, uranium. It's probably a reason gold went down, but uranium definitely. So down we go with the markets, thank God, for people like me. And look, technically it did what it's supposed to. It tested its high and came all the way back down. So this is a nice call too. Gold, for me, gold is bottoming. It's bottoming. I mean, yesterday, first of all, this is a majestic move, you know, and you know, it tagged 1860, it bounced, but no, it had to keep going. It was this day here where it was just, it rallied so much and then it closed at low of day. That was just like, no, it needs to puke more. And then that's what it did, you know, for the last 2 days. And it's come all the way down to 1810-ish. For me, you know, you can see why. You can see the way I think now. So, I mean, it's above always. When it's a big move like this, it's going to be just above. Don't wait at 1807 or 1810 or 1800 exactly. Can you imagine that? It's going to happen at numbers like 1819. You know, if that is, for me, when gold hit 1816, that's the same as my 1810 call. What's the difference? $6. So there you go. We've hit the low. I don't even know if we're going to go down lower, even if the dollar goes up more. Even if the markets go down, I think you get to a point where the gold's just puked enough and it becomes relatively strong and people start to hide in it and then it starts to outperform. You know, if the DXY does start to go to 108, then okay, you might as well have gold test 1800 or 1805, but it's a buy. It's already a buy. So for me, gold is a buy. I didn't buy any yesterday. I bought some the day before. And to be honest, I wasn't buying the gold or silver. I was buying the miners and they had a green day. So very happy with my recent buys. Let's look at silver. Silver for me, it didn't find support anywhere obvious. I mean, round numbers are always good, but it didn't get to a round number. So I think it just found support because gold did. Look at this candle from the day before, which I covered, by the way. And then yeah, it's a good candle yesterday. You know, silver was a good candle. It's a green candle during absolute chaos. Gold also was sort of unchanged, but basically it was sideways day for both of them after going lower. That's very, for me, they're going to reverse. And if they do go lower, it's because of the DXY and chaos, and it's not going to be much more. So gold and silver are a buy. So the miners, I'll get to the miners just now. Look at this, but look at this extra line I've added. I didn't think I'd need to because so far this ascending line was all I needed. But, you know, we flushed that 22 ascending, but look at this one. This dates back from even longer. It hasn't touched as much, but it dates back from longer. And to be honest, it coincides with this $20 huge round of psychological number. If we go lower with gold and silver, let's say gold goes to 1800 because the DXY is going to 108 and maybe gold flushes 1800, which is such a buy, by the way. Like I would not be scared of that. And it goes to 17, you know, 90, 1788, whatever, it'll get bought and go all the way back up to 1800 by the end of the day. I think the silver will do the same thing. Silver go a bit low. Oh my God, silver's going down. This is a monstrous buy. Just like 22 was a huge buy for months. This may even be bigger because this is after a massive smash. So down here, this is the easiest buy on the planet, silver, $20. And by the way, it won't go to 20. It'll go probably to 20.35 or something just to screw with you whilst you're waiting there, if it gets there. So for me, it's gold and silver where they are, huge buy. If they go lower, huger buy. And I think it'll rally quickly. And the next couple of days, weeks, you're going to have this big rally in gold and silver from where we are, just a bit lower, all the way back up to prior support. So silver, expect this 2250 to be tested. Gold, it'll be this 1880, 1900. I do think we'll get there. And what a move it would be for the miners. Let me bring them up, which already had green days in the midst of chaos. This is nice to see. So, but imagine, gold and silver start to go whatever, a little lower intraday, but find support. I think gold GDX, GDXJ, which by the way have been pretty decent the last couple of days, weeks. I mean, I know we've seen chaos, but given what's happened in gold and silver, we've had some outperformance days. And now, given what's happened in the markets, they were green yesterday. The markets certainly weren't. Minus 1-2% in the markets. We could start to see a rally, in gold and silver over the next couple of days, taking us all the way back up to where we were for the last couple of months, not months, but weeks. And then we're like, wait a minute, we're just where we were before, whilst the market's still down. And then you got to zoom out and take, and when you look back up in a couple of months, you think, wow, the miners were okay, actually. So I think that might happen. I think gold and silver will just sort of retest, flush a little bit more out, maybe if the DXY keeps going up, and then go back up, and the miners will go back up with the metals. And who knows what the markets are doing? They could be going down. So I think it's pretty good. And then you can start to sell a little bit what you buy down here into resistance, hold the core position that you've always held during the drop, and bam, up we go, breakout. We could start to see gold and silver go up with a banking crisis. Remember, that's what happened before. So things don't look that bad, especially now that we've had the flush. So for those that still have dry powder, like me, who've been earning 4 or 5% on the sidelines, like Interactive Brokers, during the flush, it's time to use it, because you don't want to buy as things go up. You want to buy as they go down, but it's harder to do. You've got to nibble, and I've been nibbling. I'm not going to make this a long video, but let's just quickly look at the miners. Newmont, by the way, look at this horrible close. Beautiful stuff, because I think GDX and GDXJ, like I just said, are due for a massive bounce. Gold and silver too. Newmont, I haven't added to, so I would love it to flush even more. Maybe we go to COVID lows, 33, 34. By the way, where we are now is the same price as the COVID lows of 33.3. What is it, like 5% drop? That's nothing. Think of the massive move that is expected in the next 1 or 2 years. What's the difference whether you got it at 35 or 33? It's absolutely irrelevant. If you think it's going to 80, which I do think, so Newmont looks great for a buy. Barrick Gold, I nibbled on the other day. Look at it, it was down here, right? It was 1420 or something I bought. It's actually, I bought it just above where it is now, but 1422, who cares? And it's hit its support. So we've got some individual miners hitting support. Nico Eagle also nibbled on, even though it's dropped its support. It's just on general principle. It's one of my favorites. Pan America low 13s. Look at this support. What a massive buy that is. It's still where it is now. It's beautiful. Pan America, like, look at that. Individual miners are hitting their own strong support. Gold and silver look like they're bottoming, and maybe one more flush, but where will it close by? You could have gold and silver you could have some individual miners rallying before gold and silver actually start to rally, to be honest. What else did I buy? I bought was it EXK? No, it wasn't EXK. AG I bought already down here, just under 5. Look at that. That looks very strong. Look at this close, up 4% yesterday whilst the market crashes. I'm not going to go through all of them. Another one I really like is Curve. This is one that needs to be bought. This is just, I mean, this is ridiculous. That had a nice day also, up 1 or 2%. Trust me, gold and silver start to rally and retest their prior resistance. CDE won't be here. It'll be all the way up here, Anyway, I'm going to end the video there. By the way, Bitcoin, which did okay, and I said, it was bucking the trend, not bad. Look at this. Try to break out above this 28,250 zone. But look, where did it close by? Not so good. But it's been doing okay given the market turmoil. So Bitcoin's still outperforming the markets at least, but it's all about the resistance and the support on the way down. Let's see what happens. If we start to flush, it's got this little mini level here, 26,000. Otherwise, down we go. I'll end it there. Markets look horrible. It's a beautiful thing. We need a flush. I'm still holding my NVIDIA short. And I think gold and silver look a lot healthier now after a flush. Let's see how they react with the DXY and the yields. I prefer DXY and yields keep going up, markets go down, gold and silver goes sideways. That's your signal to buy miners, because then They may even start going up as the markets go down. But whatever happens, if we do get a pivot that everyone will be calling for soon, the metals and the miners will rally the most. All right, good luck.